Brand new information out from the Department of Agriculture, and this is the world supply and demand estimates. This is where the numbers came in at. We'll start over here in the U.S. stockpiles. The average guess was 2.01 billion bushels of corn. We came in actually with 2.04, so above the trade guesses. Soybeans were under the trade guesses, 895 million compared to the estimate of 913 million. And wheat, 1.09 billion, just slightly over the estimate of 1.08 billion. As far as world stockpiles are concerned, higher for corn, 314 million metric ton. That was higher than the estimate. Soybeans, a little bit under the estimate. The 107.4 million metric ton was the number. And wheat came in well underneath the estimate of 271.1 million metric ton, 257.6. So let's look at the futures numbers and get analysis with Todd Horwitz here in just a moment. We've got the May corn now up 1.5, 361.5. December is up a penny. Soybeans for May up 1 1/4 at $9. November up a half. In the wheat market, we've got the July Chicago wheat down 2 pennies. Kansas City July wheat down 3 1/4. Minneapolis July wheat up 3/4 at 532.5. Let's check in now with Todd Horwitz, Bubba Trading. So Todd, now what do you think of the trade here? We've seen all of this so far.
Good morning, John. Well, you know, it's funny. When I got ready to come on, I was looking and everything was down. Now everything is up. And I think, again, this goes into the theory that we believe that the markets are going to go higher, that when they dip down, they're really just buying opportunities, and you've still got people trying to push these grains lower to try to break them down. I think that is over with. I think the lows are in. I think we look for opportunities to be buyers, and I think, again, this is going to be the action. It's not going to go straight up. There's going to be a lot of heartache and turmoil going on between here, but in the meantime, I think the new direction is now higher. I think the lows are solidly in place right now.
Do you think that there's a certain event, maybe an agreement with China, maybe the weather, maybe both of those events, that the market has an idea of where where all of these levels need to go?
Well, John, I think the markets have really already priced in a deal with China, which is obviously not as bullish as we'd like, but we still have a dramatic amount of oversupply. We still have not had any event that has created any negativity as far as a supply holdup, number one. Number two, you've got every bit of bad news already priced into the market. So again, I think the market's kind of winding up, just waiting to pop and go higher. And then once it can break out of this range and get to those next levels, I think then it really takes off to the upside. So I think really all the bad news has been priced in to push it lower, and I think that's been exhausted now, and I think now we'll start to see reasons for it to go higher.
I want to get your thoughts here on crude oil also. We're just a little bit weaker here today, just now under 64.
You know, John, I think, as I said yesterday, I think that the big pop was more based on the coup in Libya, and as that starts to settle down, I think the near-term highs are now in crude. I'd be looking now for a spot to sell. I think what you saw here is that backwardation, which showed a lot of fear in May, but the back months were not at all concerned about what was going on. I think once this totally resolves, we should see crude pull back to 60, and then I think possibly lower. But again, it's like any other market. It's not going to be easy, and they're not going straight down. But I think we're on the top side now, and I think you're going to start to see some pressure build its way into there. You can see oil to continue to go lower from here.
Thank you very much, Todd. Always appreciate you coming on the program and being here with us. Todd Horwitz, Bubba Trading here, joining us for this portion. Be sure and stay tuned. We're going to get to the livestock trade. That comes straight ahead right here on the Marketing Report.